Hey, good morning, everyone. Welcome to Friday. It's another edition of Gimbal Financial Live. I don't know what we call this broadcast, but I think that's as good a name as any. Hi from me, Amanda, and Keith is jumping on. And as you see, the safety disclaimers, the one at the top, I'm always looking for new safety disclaimers. And I was looking at our life jackets, and one of our life jackets said, "Do not dry clean." And so, if you're accustomed to taking your shirts and your suit pants to the dry cleaners, don't slip up and include your life jacket. But as we talk about the stock market, as we talk about indices and indexes, I like the S&P 500 or the small cap S&P 600 or the NASDAQ. These are just groups of stocks, and you can't necessarily buy an index, but you can buy something that looks like an index. And so as we talk about these indices, our goal is just to help increase education and provide value to you to what's going on with the stock market on a weekly basis. So that's the scoop there. Let's see here. I'll go back and take this off. Oh no, where did that go? There we go. Okay, so hi from Kosciuszko County, which if you don't know where that is, Kosciuszko County is about 30 minutes or so west of Fort Wayne, and this is my happy spot. My in-laws own this house right here, and this has been just such a joy for us, and it all came to fruition because of capitalism. And so Caroline, my wife's grandparents, were entrepreneurs in the truest sense of the word. Way back in the day, they had a vending business. And Amanda, you probably have never experienced this. Keith, yeah, I'm thinking Keith has experienced this, but there used to be vending machines where a cup would drop down and then you could press a button and it would be filled with whatever beverage you wanted. It may not have been a name brand drink. It might have been root beer that a group created themselves. And so they started doing that way back in the day, and they had these vending machines, cigarette machines, all kinds of stuff in like Borg Warner's factory inside Ball State University's campuses. And it was just a really, really cool, small local business. So I just give thanks for Caroline's grandparents' visions to operate the way they have. And it's a legacy effect. I mean, we are the benefactors of enjoying this place. And so anyway, that's a little bit on capitalism, but definitely as you're putting on your life jacket this summer, do not get it dry cleaned. See, Amanda, you're a man in the office. Where's Keith today?
I am in Kirkland. I'm in Kirkland, Indiana.
All right. Now, where's Kirkland, Indiana for all our friends who are looking at this video from out of state?
Well, if you're coming around the loop in Indianapolis, 465 encircles the city. On the northwest side is a road called 421 or Michigan Avenue. If you follow that out of Indianapolis for about 30 miles, the crossroad at State Road 28, I believe it is Kirkland, Indiana. We had a friend, Vern Price, that lived up in this area years ago. Vern passed away a decade or so ago, but we enjoyed coming up and seeing him. But I think I mentioned in past videos that I've got a state map from AAA and drew horizontal and vertical lines across different state roads to go explore Indiana. And so we are working our way up. We just decided earlier with a conversation, we're going to see Doug on our way towards LaGrange, Indiana today. So we're exploring part of the Northwest today.
That's cool. Well, happy exploring. Fridays in the summer are a great day to do that. And thought Amanda, before we get into the stock market conversation of the week, you had an experience helping a client this week on security. And it's interesting that you had this discussion because a couple weeks ago, I was preparing for this show, and Keith, you probably do the same thing. I've got like a book of like what we could possibly talk about. And one of the things that I wanted to share and talk about with people is just Fidelity's security service um, options. And I just like to start off, if you ever receive any notification from anyone, whether it be Fidelity or a mutual fund group or something even in your 401k, just pause, and before you respond, you might consider giving us a call just to make sure that this is legitimate. The phishing, the scammers, they've just gotten so much better in their techniques and tactics, and so always just feel free to give us a call, and we can help you navigate through what's happening inside your accounts. But Amanda, you had something this week where you were helping a client, and you were able to work with Fidelity to help them make sure their accounts were safe. Do you want to talk about that a little bit?
Yeah, so we got notified the same day that the client would have gotten a letter generated. So we got it at like on our side as a notification. But I reached out to Fidelity because it's a little vague, and it was, cause for concern. It was a fraud trigger essentially from Fidelity's side, which no crapping on LPL, but this is the first time I had ever experienced something like this where we were notified first. There was a complete restriction put on the account, so no money could leave the account. And that was all kudos to Fidelity. Whatever systems they have in place triggers a warning and then just completely shuts it down. Unfortunately, it means even if you've got periodic money that goes out each month, it'll even shut that down because they want to be that secure. So I've worked with the client, and I will say, any kind of change is hard. And so it can be frustrating dealing with technology. These specific clients were not huge fans of technology to begin with, but Fidelity was very helpful in making their email, their accounts protected. And that's a big thing for us, for you guys. Because like you said, Doug, the scammers out there are very, very complex. They're very good at what they do. And unfortunately, it means the people who are doing good out there may have to change the way they do things a little bit. But we were thankfully able to help these clients. They're getting all new account numbers. And that's just how Fidelity rolls. And we're very thankful for that.
Yeah, nothing's bulletproof out there, but with artificial intelligence, what looks real, it takes a lot of discernment to know what is real and what isn't. And so high fives to Amanda for working through that. And anytime you have a question, just give us a call. Fidelity has great resources. We can put your account on a lockdown. We can give you guidance on steps you might do with your bank. And just a great reminder again to always be checking your passwords and maybe refreshing those on a quarter-by-quarter basis as well. Keith, you probably have tons of thoughts on this. Do you have anything that you want to wrap up in regard to security?
Yes, it's kind of I think it's a mathematical thing, some of these scams, and unfortunately, as we mature, our skill sets are kind of like a bell curve, and they peak and then begin to diminish a bit. And sometimes our discernment can diminish, our communication skills, a lot of things like that can happen. And I believe the scammers actually have studied that psychology, and they work that psychology in order to take advantage of people, particularly those with diminishing mental capacity or early onset dementia or Alzheimer's. And a friend of ours just got scammed last month or the month before for $40,000. And every time I hear of a scam that's going on out there, I try to take note and pass that on to you all to help you. In this particular one, an authoritative sounding voice said they were from the FBI and had told the older gentleman that the scammers had got access to his account, and that we need to, as the FBI, take complete access of your account. And as we do this, then that'll protect your money. And that everything sounded very legit in the phone call to him. This man was, I think he's in his 90s. And so when he gave access to his account, they took the $40,000. And so what I would encourage you as you mature is to give more and more conversation with your children and your loved ones, when you, particularly if anything unusual happens. There's this particular scam, they told him that it needed to remain confidential and he shouldn't tell anybody. And so I would say that's a red flag. Anytime somebody says don't tell anybody, you are probably on the verge of being schemed. That's what I know about it recently. I kind of keep tabs on these sort of things just to try to help folks.
That's a good word. Yeah, isolation's never good. And so if you're being told to keep it quiet, that's probably a great indicator. Yeah. Well, again, reach out to us. Use this as a resource. You know, there's plenty of do-it-yourselfer options out there, and they're great. However, the bonus of having an Amanda who can jump on and speak the same language as the investment services company is just huge. And so anyway, let's go ahead and shift to the markets and see what's going on. I was paying attention to a podcast that I like to listen to, and the podcast was talking about historical context. And for many of you, you've been investing for a long time. You've seen different seasons of the stock market, and this podcast was jumping back in time and talking about the stock market in 1994 through 1995. And I'm just going to punch in some dates here. And in 1994, there was some inflation happening, and the stock market guessed what to do with that information. And so I just wanted to share this as many of you have become accustomed to seeing our charts and graphs. This is a MarketSmith chart provided by Investors Business Daily. You can get this, you can see charts like this on investors.com for free. But as you can see, this is in the summer of 1994, and the prices were below their 50-day moving average on the NASDAQ. Below their 200-day moving average on the NASDAQ. And then the 50-day was really dropping off sharply. But as we go out, and what I'm going to do is just skip week by week here, and you'll see how the market is responding to inflation. And as we go through, you see we went through the 200-day, and it started to look a little better. And then it went below the 200-day. And this is what I feel like we saw all of 2022. We started to see the stock market come up to its 200-day moving average and then retreat and go back down. And it was like head fakes. But then the market started to look a little more favorably. And this was in response to new technologies coming out, the internet. And this was the next big thing. And as you can see, this rally just exploded and took off. And some of you may have been investors during this time. But one of the things looking back at this rally that started to take off in 1995 was just to take a look at the new trends and the companies that were emerging. And retail stocks, internet stocks, semiconductor stocks were all looking pretty good. There were new brands catching trends, like Kenneth Cole was a new brand that was beginning to launch, and you can just see just a great stock market rally here. And so that was very encouraging to me to go back in time and just say, hey, what does historical context have to do with today's market? And just realize, I don't know if it's Mark Twain who said it, but history doesn't repeat itself, but it rhymes. And we can see the effect of that in the stock market or even if we were to look more specifically at individual stock names. But this week, we've had a good little run here going back. Let's see, 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. It's just been pretty strong. And most of that has been with the large technology names. Have you been seeing anything in particular that you want to talk about in the market, Keith?
I was looking at some Ned Davis research this week, Doug, and it kind of affirms kind of what you're saying, that it goes all the way back to 1970. This one report I was looking at, and coming off of the bear market bottoms, we're near what Ned Davis would say a bull market again. It's 20% rally off of the bottom. And what they've said with every bear market that we've had since the early 70s, this particular one, the majority of all the upside gains has happened with the fewest number of stocks, and half of this rally has been in those big high tech names like the Googles and the Apples. And so it's been it hasn't been as much of a sharing the wealth market as most rallies from the bottom. And we can look at a lot of mutual funds and see that, where they just haven't come up at all. I don't know if I want to mention any names of funds that we've enjoyed in the past, but they haven't attracted us to put those in client accounts yet at this point in time.
Yeah, and so what we would like to see is we'd like to see this rally just continue to invite us in. And what I mean by that is have some pullbacks. This green line, we don't really talk about that, or the green line, too much on this show, but this is a 21-day. And if we were to see the market, the NASDAQ, pull back to this 21-day, that would be a very healthy thing. That would be institutions or individuals selling some of their shares, taking some of their wins. And then if it could find some support around this 21-day moving average, that would be an opportunity for the rally to continue more. And so with any investment, whether it be a stock or an ETF or a mutual fund, we want to see it give us more than one invitation to get in. And that's the way the stock market works best, is when it gives a nice rise, a cooling off, and then sets up again for another move. The NASDAQ has been the leader by far, and that's been great to see, because last year the Dow stocks were the ones that were outperforming the NASDAQ and even the S&P 500. So let's see, switch over here to a weekly. This is an important one. I know we've talked about this several times, but as you can see, that the peak of the market, or the peak of the NASDAQ, I apologize, my internet's running slowly here. Was 16,212, and that was right around Black Friday. And since that time, we've just been in a downward trend until here recently. In late April, early May, we broke through, and the NASDAQ, the S&P have been looking stronger. Switch to the small caps. If you've been paying attention to the market, you'll hear words like the breadth of the market, or and what they're talking about there is, are more stocks participating than just the ones that Keith spoke about. And we really haven't seen enormous breadth to the market yet. There were a few sectors that started to look good. There were some cruise stocks, some travel stocks that had started to look good. But really, we haven't seen the branching out of the stock market in depth. And this is the S&P 600. As you can see, it's still fighting its 200-day moving average. And that's this black line right here. For the market to really take off and give us a new bull, I'd like to see these small and mid-cap stocks start to perform and look like the S&P or the NASDAQ. So that's the wrap up on the stock market this week. It's been a good week. It's been a good last couple months. Expect some volatility as we get into the summer, and mainly just because we've had some wins, there will be some profit taking that I would expect to see. And if that pushes us back to, the last month or 21 days, that's okay. That's okay. Just hang in there with it. Keith, do you have anything else that you'd like to talk about?
I had a couple ideas I was pondering this week. One, I came across a document in a file here. I'll show it briefly. I don't think there's any personal identifiable information on it, but it's signed by Keith Allen Tyner, 8/23/1983. It's a Student Assistant Commission of Indiana Plus promissory note for my graduate level degree.
Oh, your audio is cut out.
You hear me now, or?
Yeah, gotcha.
Is it okay? I was paying 12% interest on this $3,000 student loan to get my graduate level degree, and that was interesting in and of itself. But what I was pondering on this was this loan for the MBA. If I've plugged it into inflationary things to see what the cost of that graduate level degree today would be, a little over $9,000. So the cost of my MBA to me in today's dollars was $9,000. So when I looked at what is the average cost of an MBA today, it's probably somewhere between $27,000 and $50,000, if not more than that. And all that means, in my way of seeing it, is that education costs have gone up much faster than the cost of inflation. And consequently, it just means that students and future students need to really stop and think, is this the best use of my time and money? And so I saw that loan document, and I just thought that was a really interesting thing from way back in the day.
Was that part of your shredder day that you had in your driveway when you were going through old?
Yeah, it was. I saw it and I'm like, why do I have this? And I thought, and bring it to everybody's attention. And if you're helping people think through education decisions, the decision for me all those years ago was much easier than today, because there's so much you can learn without paying a dime today that it may make sense to rethink whether college expenses at the magnitude they are the right thing for you.
Yeah, and if you're like me, somewhere between 40 and 50, and you're thinking, what is my purpose, my competitive edge in the market? There are so many places that you can go to learn today just for free. It's amazing that you can jump online and chat GPT at something you're curious about and develop your skill sets and sharpen your saw. So for all you older people out there like me, I would encourage you to keep going to school and stay curious with your current profession or whatever you're looking to get into next. That entrepreneurial spirit is the spirit of creativity. And I think each one of us have a deposit of that inside of us. And maybe it's something that you haven't turned on for a while, but it's still been there. Maybe it's you were a pretty good artist as a kid and you need to go get a sketchboard or some colored pencils. I don't know what it is, but I want to encourage you to just keep developing your skill sets, and your best investment is always in yourself. Your best investment is the one where you're saying, hey, what is it that my spouse is interested in? How would I pour gas on what she's interested in, what she's curious about? And so, going back to school, I don't know, Keith. I don't know what that would be like. I can't even imagine sitting in a classroom. My ADD would probably kick in, and I would never survive. But
I think it's really interesting, because I think the idea of being educated has been kind of blocked in minds based on what the institutional way of educating people has done, sitting people in a classroom. But that was all of that was a result of the Industrial Revolution. So that sitting in the classroom that way they do is just like we're going to put them in first grade, second grade, just like we put them on a conveyor belt. But I would suggest to our friends that are watching today that you and I both probably spend each year the equivalent of what I spend on my MBA every year in training. and
no
I'm
doubt.
motivated to sit and get trained with what I learn every year. And so and I'm not sitting usually in a classroom for the training that I'm taking right now. I'm learning sometimes video, sometimes in person, but the way that you learn, don't limit it to a classroom would be my suggestion.
Our good friend Aaron Walker, Big A, he is a professional coach, and he once told me that he'll spend 10% of his income on educating and developing himself. And that just shows what a great investment that you can make. So, Amanda, do you have anything else that you would like to add?
I don't think so. Good to see everyone.
Yeah. Well, I hope everybody has a great week. And again, just to wrap up, if you do have security questions or you want to know more about our experience that we've had earlier this week with Fidelity and the things we've learned, feel free to call Amanda, call me. We are happy to talk with you about it. And yeah, go
I do
ahead,
have one
Amanda.
more thing. The client actually was like, it could have been me trying to get in. And so we just never know. You know, we sleep since we've tried to log into things. We've, you know, eaten, and it happens to the best of us. So just, you can never be too careful, but don't hesitate to give us a call if you're even slightly freaked out by it. So.
Yeah, and you know, it's a wonderful thing to hire out extra brains. You know, I can only operate at this capacity right here, but when Amanda and Keith and I are working together, I get the benefit of them, and y'all get the same benefit when you call in and you have questions about, you know, whether it be security or your account or how you could be investing. You get access to our brains as well, and so we can team up and we can win it. But hope everybody has a good week, and we'll just look forward to seeing you next time.
Toodaloo.
See you guys. Bye-bye.
Bye.